Right. I think we can get started. Good afternoon, ladies and gentlemen. Thank you for joining the maiden edition of our Fireside Chat with Mr. Fehintolu Olaogun, who is the Chief Executive Officer of CredPal. My name is Oluwaseun Joshua Ayonshola. I am more commonly known as Sage, or the Sage of Oxford, even though I don't have a degree from Oxford. I mean, at least not yet. I am an associate in the banking, finance, and fintech teams of Aluko and Oyebode, and I will be the moderator for today's event. But before I introduce our very amazing guests, I will like to do a short introduction of the firm and what we hope to achieve with our Fireside Chats. Aluko and Oyebode is one of the largest integrated law firms in Nigeria, with offices in Lagos, Abuja, and Port Harcourt. The Fireside Chat is the initiative of our fintech and private equity practice, which is at the forefront of promoting thought leadership and driving policies in the fintech space. And we do this through extensive writing on topical issues in the fintech space, and also providing feedback to regulators on exposure draft, which we believe can affect the fintech space. I mean, for example, one of our comments on the exposure draft for the regulatory sandbox was taken on by the CBN and formed or helped to form the final approved version of the regulatory sandbox. So today, we, and particularly with the fintech and Fireside Chat, we hope to spotlight great fintech companies and fintech founders like Mr. Fehintolu Olaogun here. And we hope that we can continue to drive the conversations further. And today, as you can already tell, the session promises to be exciting, informative, because we have found the best man for the job. And Mr. Fehintolu will be holding our hands to have this very important chat or conversation on digital lending and digital loans. So if you would permit me, sir, to proceed to read your citation. So Mr. Fehintolu Olaogun is a high-risk entrepreneur with over 13 years experience in results-driven leadership, designing and creating best-in-class solutions that bring about progressive and far-reaching changes in any entrepreneurial ecosystem. In 2018, Fehintolu became the co-founder and CEO of CredPal, a fintech startup that offers consumer credit through credit cards and loans to Nigerians. In March 2019, only after a year of its existence, CredPal received $150,000 in seed money from Y Combinator. In June 2020, CredPal got selected for the 5th edition of Google for Startups Africa. And in December of the same year, CredPal raised $1.5 million from backers like Y Combinator, Greenhouse Capital, Tangerine Life, and other VCs. Ladies and gentlemen, it is my personal pleasure to welcome our guest speaker, Mr. Fehintolu Olaogun. Thank you for honoring our invitation, sir.
Yeah, thank you very much, Sean. Yeah, or the Sage. It's a pleasure to be here.
Yeah, same here. And for those of you who care to know, I went to Ife, Mr. Fehintolu as well. So I'm sure those of you who didn't go to Ife should be very jealous right now. So great Ife, sir. In case you
great Ife, yeah.
Great. Right. But before we go on, just to set the tone for the conversation, of course, I have quite a number of questions for Mr. Olaogun, but as is our practice, we like to get audience participation. So I'm sure you must have seen the Q&A box. So please send in your real-time questions so that we can deal them after the session that is the main session with Mr. Olaogun. So please send in your questions. We'll try to pour through them to the extent possible, and those which we cannot, we would try to respond and then publish it after the event. So yes, and I know IT will be putting up a poll in a short while, just so that we can get a feel of the audience breakdown. Are you lawyers? Are you business people? Are you students, entrepreneurs, and so on and so yeah. So I would like you to participate right now and tell us what's your profession, what you do, so that both myself and the speaker can, speak to your different concerns. So, okay, so while that is going on, I think we can just get right into it. So, Mr. Olaogun, I like to ask my speakers that, and almost everybody that I meet, mentors in particular, that beyond, CredPal, that is what you do, who is Fehintolu Olaogun and what makes you tick?
Yeah, thanks. Thank you very much, Sheon. Yeah, so, well, for me, all right, what makes me tick particularly is being able to solve problems, right? That's been my passion, from when I was very little. Even when I was in university, I remember, there's time I used to buy stuff from Computer Village, and I saw the chaos that was in Computer Village, right? That was when I was in the university, and decided to build out a solution that would document, the shops in Computer Village like a directory. I even got a lot of merchants in Village, to join the platform, and all of that. And that was when I think I was in trainer level then, when I did that, right? And to an extent, it solved a lot of problems, for myself and a few other people too who were trying to buy stuff from. So for me, it's been a long life passion for me to love solving problems. And when I came about the problem that we had with credit space, particularly point of sale financing, where a lot of people, and even till now, we still have that problem where you have to buy almost everything you want to buy with cash, right? In the US and most developed countries, buying a phone, like most phones come with financing options where you could pay for 12 months, pay for 24 months, care about. You also get a lot of sort of benefits with mortgage and even rent. But in Nigeria, you have to pay like everything in full at all times, right? So seeing that problem was what led us to found CredPal, and like I said, what makes me tick is being able to solve problems and see people happy, from those solutions that I provide.
Thank you so much for that question. My takeaway is definitely that what makes you tick is solving problems. And in fact, solving problems you have done with CredPal. Just before I go on to the next question, and I must congratulate you on that, on Y Combinator, and I'm sure there's still a lot of questions that we have prepared for you. So the results of the poll just came in, just so you know a feel of what's your the audience breakdown. So we have 41% lawyers, 3% founders, 3% engineers, 3% software developers, and others, 50%. So I'm sure there's a lot, a whole mix in others. So
the others, yeah.
Yeah, right. So we know this conversation will be important, not only for the general public, engineers, but also practitioners, because a lot of us still grapple with the subject, and we're taking this opportunity, for you to shed, more light on the fintech space and demystifying fintech products. So following on from what you said, I know for a fact that you graduated from Obafemi Awolowo University and also obtained a master's in information technology from University of Lagos. So it appears to me that, schooling or getting a degree, or something that you actually maybe put your mind to, or scholarship. But there is a different body language from tech founders today. We know Andela already dropped the requirement for a degree. There are certain people, I'm sure, who are on this call as well, who maybe are engineers and are thinking that they're not getting any value from, just going to class and, cramming textbooks when they should actually be on the field and creating stuff. How would you say, your degrees, have been relevant to the kind of work you do? And what advice do you have for that person who is seriously considering dropping out of school because they want to be out there doing the real tech stuff?
Yeah, that's a very good question. So for me, I've been keen on schooling, and I'll explain why that is. So on the first side of the question is you asking, electronics and electrical engineering from OEU, and it's a very tough course to study, right? Which two things. So engineer, and a lot of my knowledge now still revolves around software engineering, right? And what the degree helped me to do was to see systems the way they really were, right? Even though we're all writing code and we're all putting things together, right? Most systems are built around fundamental systems around engineering, right? So we have things like redundancy. So for instance, for most systems, your critical points will need a bit of redundancy. So in case there's a failure, there's a backup on that side, right? And there are different layers of such in the system. Some things are nice to have. And for instance, I use a car as an example. So for most cars now, having a brake is very fundamental. Like it's super, super fundamental. So your braking system has to be at the highest quality, and that's be one of the most reliable systems in your car. But your wiper, for instance, or the wiper, for instance, and some other minor things like a radio, could fail and the car will still move, right? So all of those things is what, engineering really taught me when I was in school. And when I started designing systems, early on in my career, I was able to build systems that were very reliable, and prioritizing was easy for me, knowing fully well that some parts of the system require a lot more stability, right? And going forward to my master's, I decided to go for master's largely because of the fact that, on one side, I was a very good engineer, software engineer, but I needed to have an holistic view of the profession, right? For most startups today, it's only about 30% engineering, right? There's a product side, there's the operational side, which is very heavy. There's the business side too. There's the finance side. There's the legal side, regulatory side. That they're like different facets of a tech business. That most like core engineers might not be able to get a grasp of, right? So going for my master's, I was able to not only focus on the engineering part, which was the last part of the syllabus, but there was a lot of courses on the legal side. I know I really gained a lot from the legal side, compliance, even agree up to agreements with the, and use of your service and all of that stuff, then all the way down to even architecture of the entire system. The business side too was factored in, So in a way, that degree gave me a more holistic view, of what I was trying to build, with my company then. Yeah. So for me, right, the reason why like I'll really encourage people to go for more education is the fact that programming itself is just one part of the big puzzle of being a technology startup, right? As you go higher in your career as an engineer, you start getting some leads, that keep pushing you down because you can't really move into that next because you don't have that wide experience, right? And even for most businesses, right? For instance, if you're going to work in a very structured organization, right? As you go higher, like an MBA, which gives you that all-round experience of business, comes to count, right? If in regulatory space, for instance, like if you're going to be, say, on the board of a bank, for instance, or you're going to move to a higher level in a regulated industry, you will need to have some degrees, you need to have some qualifications. And the reason for that is not because people feel like, hey, guys, you have to get. The most important reason is the fact that tech in itself is just, as in coding itself, like that's writing programs, is just one part of the entire puzzle of building a technology business, right? And you need to be, and wanting to be sure that you have that all-round knowledge. And to the last point I'm going to make, right? So for most people, right? I know a lot of engineers, right, who have no degrees. They earn fantastically well. So it's not like you must earn a degree or go through school for you to become relevant in the tech industry. For the most part, like 80% of those in tech industry really will not need to ever go to school in reality, right? But for those that want to pursue that higher path, in their career, it's very important that, they try, if they can, to pursue, a degree, and most importantly, to have that all-round experience, from other courses that are relevant to them in their field.
Yeah, thank you so much for that. I mean, a lot of takeaways that coding in itself is just a tiny part of building a technology business. And personally, I know that, the most painful thing that can happen to anyone is to know that you're very qualified for a role, but you just didn't get it because you couldn't tick just one box. And, and that could be, the additional experience. Maybe you just didn't get an NYSC certificate. You are obviously overqualified for the job, but because of that, you couldn't get it. Or you're super qualified to be MD of a bank or sit on the board of a company, but because you don't have a degree. So definitely agree. So if this speaks to anybody on this call, you're in 300 level of 4 and you're just about to finish, just, like Mr. Olaogun would say, the class of grade would not really matter, but the fact that you have the degree. Thank you so much for that. So the next question for me, and first of all, I'd like to ask you whether you think there is a funding problem. For us finance people, we seem to think that there is more money chasing entrepreneurs rather than the other way around. But there are entrepreneurs who think that they can't find funding, right? So for you, first of all, do you think there's a problem with funding in this ecosystem? And second of all, how were you able to achieve, MVP before the seed money came, without funding?
Yeah, so there's a funding problem and also there's no funding problem. So it depends on how you want to look at it, right? So the good thing is that so far for the past few years, like in the past 2 or 3 years, there's been a lot of focus on Africa, where we've been getting lots of investments coming into the country, which is a very positive thing for the entire continent, right? So on that side, I'll say there's a whole lot more funding opportunities, available right now, but it's still not enough. I must say. Now, for the entrepreneur who is seeking to start his business and requires funding. So the good thing about it is that, like in our case, for instance, before we got our first check, first of all, we were able to build out an MVP, right? Because I had a tech background, I also had a group of engineers that worked with me for a while in my former company. I was able to gather that minimal resources to build out the MVP, right? So, but for those that don't have that initial capital or resources to build out the MVPs, once you, for instance, will take in a project that's just an idea, right? And there are a couple of other structures that will take startups at the idea stage, even before they get any form of traction or any form of revenue, right? So one thing you do is that put together your ideas in bits. I really love what Google has done with their suite, right? For instance, with an Excel sheet, you could do a whole lot, right? With Google Forms, you could do a whole lot. So you could build out MVPs even out of baseline tools, like having a landing page, of some sort, having a form on the back end of the landing page, being able to replicate, what you're going to do with technology, slightly offline, right? And then mix a bit of tech with it, right? So, like I mentioned, there are a lot of Google tools that can help you with that. There's even an apps, there are no-code app creators, right? That allow you to build that an app with little or no knowledge of code. The first step is work with what you have, with all the fantastic great tools out there that are free. Build out that MVP or that validation, put together a very nice and compelling deck, and it's very helpful for that. And once your investor sees that you have a very good understanding of what you're trying to do, and it sees that you've already gone ahead to do something, no matter how small it is, improving that you have an understanding, then you can get that early backer. You can get an angel investor that's going to give you, say, like $10K, $5K, to at least get that first MVP out. A lot of hard work and perseverance and focus, I believe it's going to be easy for you to keep attracting better funding as time goes on. Because, like I mentioned, even on our journey, we got into a first accelerator that gave us $20K, which was very, very small, right? But then it was a whole lot of money, for us, because at that stage of the business, we needed just validation to prove that we could actually make this work. And 20K was more than enough at that point of time in the business. So yeah, start small and keep building till you get to where you want to get to, and the journey continues after that even. Yeah, so that's the, so did I answer your question 100%, or do you have?
Yes, definitely 100%. I mean, I just realized that we're just throwing MVP here and there, and there are people on the call who may not know, what an MVP is. I mean, do you want to just explain in a few words?
Yeah, so an MVP is a minimum viable product. Now, I'll demystify MVPs, right? An MVP doesn't mean solution. I described something earlier about using Google Forms and Google Sheets and free stuff, right? A product in itself is a combination of processes and different tools and resources, right? And as opposed to you building out an app or a full web app, right? So when looking at MVPs, don't look at an MVP as, oh, I must have a website with a sign-up form and a dashboard. Don't look at it that way. Look at an MVP as you having a product that someone can consume and use, in the simplest form. But like it's a minimum viable product. So you could Google more on it and then get more information on what an MVP really means.
Yeah, thank you. Very helpful. So again, please do not forget to send in your questions. And I'm sure while the conversation is going on, there are questions that come to your mind. You're just a click away from the Q&A box and send in your questions. So, just wanted to ask you a bit of a personal question. How much do you think that the company you kept in school, or was it good parenting? I know you have a professor dad. What exactly do you think made you the person that you are today? So for me, I like to say that good parenting saw me through secondary school, but it was good company really that saw me through the university. And till everybody knows that I have like a very small set of friends, and they help to push. We help to push one another. And that, in fact, makes me the person that I am today. So is it the same experience for you? Or how exactly do you see it?
Well, for me, of a lot of things. So one is my parents are professors, right? So to an extent, I was raised quite seriously on one side. But, on the other side too, it was also a bit of a challenge, because they were expected to go to school and become a doctor. Like, for instance, I should be an engineer, right? Maybe working in Philips Electric or something. I don't know, right? That's what I should be really. But here I am running a startup, a fintech startup, right? So on one side too, even having all of that lined up for you might not be so helpful on the long run, right? But the key thing that really helped me, and I think is very important, is knowing yourself, and believing in yourself, right? If you see that you have a passion for, and let's start from the engineers. You see, if you have a passion for writing codes, that will help build great softwares, right? You have to pursue that. The good thing about it is that your friends will kind of revolve around people that share the same purpose. So you see engineers mostly being in communities of other engineers. There are lots of dev communities in Nigeria, and for most types of vocations around engineering. That side where once you have a passion for doing something, right? It could even be the legal profession, for instance, where you want to focus on a particular field, and solve problems in a particular field. You find company around and communities that will help you achieve that. And the good thing is that with the likes of Twitter is currently banned in Nigeria now, but hopefully that gets lifted. But with the likes of Twitter, communities, on Twitter, they say there's tech Twitter on Twitter, there's legal Twitter on Twitter, there's political Twitter on Twitter, right? So even on such platforms, you can find niches, you can engage people in that area, in your area of interest, and kind of like get a lot of information and also build relationships with them. So I think the world is changing very fast. Where you are coming from really doesn't affect where you're going to so much. This, once you can find a passion, something you really want to do, and you can find the right community, whether offline or online, I believe you can thrive for the most part of it. So I'll say, don't look at your past, just look at where you're trying to go to, and then find a community or focus groups that will help you achieve that.
Thank you so much for that. Indeed, the company and even our mindsets, a lot of times you have to self-motivate, and then finding the right set of company would also help a lot. I want to talk a bit about challenges, right? A lot around as a business person, challenges you face, and then from a legal and regulatory or compliance perspective, I'm sure the lawyers on the call would definitely want to hear your thoughts on that. So I guess a good way to start will be, for one, how enabling do you think the current legal and regulatory framework for fintech is in Nigeria? And in your opinion, what do you think lawyers can do, to support fintech founders or fintech businesses?
Yeah, so I'll speak more towards the digital lending space, right, on that side. So I think regulation generally across the fintech space has been, I wouldn't say it has been 100% favorable for most founders, largely because of the fact that a lot of I'll call prices came up, over the past couple of months and 1 or 2 years, right? But the good thing about it is that we always find a way to circumvent that. But notwithstanding, that isn't the ideal way to live, right? We shouldn't be living always on the edge of, oh, today there might be an announcement that would mean that I'll have to change my entire business model or take out my entire tech stack and replace with something else, right? Because I'll give an instance. When the BVN restriction came last, right, most services went down across the country, and it came in barely 2 days. So there was little time for us to even react on our side. So on that side, I'll say that the government and the regulatory space should be a bit more should empathize a bit more. So even if their intentions are right, which means that they're trying to protect the integrity of the entire system, but that empathy towards the real life situation of a business, that's giving a bit of more wiggle room, grace periods, as we will give to in lending to sometimes. For instance, if a customer says, "Oh, I can't pay you back because my salary is being delayed," right? We'll need to give him a bit of grace period before we start going hard on, right? So I think on that human side, right, we have to is what we need. Now on the core side, one thing that really affects lending particularly is the fact that collecting is a bit hard, and enforcing is also hard too, right? So for instance, in developed countries, if you have a bad credit score, you likely not be able to get a lot of things. Even renting an apartment will be very hard for you. But in Nigeria, there are ways around everything, right? Which means that, a lot of people could owe and still there'll be no strong incentive to pay back or movement to pay back because there are no repercussions for doing wrong, right? So I think on that side, which I see the CBN has been doing a very good job on in terms of there's a global mandate now for collections, that's GSI. So which means that you could maybe debit the customer's account from any bank in which it holds money. That we haven't really seen that in full force, but at least there's that intention, from that, right? And I think a couple of other things around that will really help, because in most cases, customers want to pay or could pay, but then because they feel like, oh, there's no strong incentive, I could use that money to go do a party or do something else, right? And then decide to delay being paid back, over a period of time. So I think on one side, it's going to be helpful if the government kind of like create those policies around that. Challenge, would be in terms of like the licensing side, right? Now, getting licensed in Nigeria, in simple terms, right? For most part of it, you are paying more extra fees or paying more around getting it than even the actual licensing itself. So I think on one side, while trying to enforce licensing, that ease of doing business should also be a core part of the goals of regulatory bodies. So fine, give us regulation, but make it easier for us to get regulated and get compliant on the other side, right? So that ease of doing business in itself is a very strong factor that needs to be addressed. So as lawyers, I think that it would be helpful if, it's a whole lot more seamless, in terms of the experience for founders and other business people, right? And also having the right policies in place that ensures that to an extent, someone can actually get it. So for instance, now, if my bank and I have 24 hours. You have a time window to revert that, right? Which is fantastic because it works now. Most banks will reverse your money quickly on that side too. So if you have such policies that allows things to move a whole lot faster to within the regulated space, then it helps us a lot. So even when their policy changes, it's easy for us to adapt, and we're sure that it will take us another 5 or 6 months for us to even get compliant based on a new, and that way business is suffering while all of that is going on, which is what has been the biggest challenge for most founders in the fintech space so far.
Yeah, great. I mean, just a follow-on to that, is just, so what type of legal support, will the digital lending space typically require today? What kind of legal support do you typically require? I mean, other than just applying for, licensing and all that.
Yeah, so one would be on the compliance side, because as founders, for instance, we are more focused on selling, right? So there's a whole lot of gaps that we create while trying to sell. Now, it's part of why regulation sometimes gets very strict along that line, right? Because it's easy for you to lose track of those gaps and keep selling. So for instance, like on the compliance side, there's the AML, anti-money laundering, and all of that. So if one is not careful, we see a lot of fraud happening in the fintech space more because accessible to customers, right? So if the customer wants to do anything fraudulent, he will likely choose to opt for a fintech provider as opposed to going to a traditional bank who knows that it's going to go through several hoops, right? So I think on the legal support side, being able to be compliant and being able to play safe, while trying to scale heavily is very important for us, right? So it means that, you look at the entire journey of lending, for instance, or even digital banking or other services, and kind of like see what the gaps are in the process and help mitigate losses or risks that will come with it, and even also protect the customer too, right? Because the customer in itself ultimately is the king, right? And it's the reason why everyone's in business for the first instance. So that's two-way protection for both the company and the customer is important. And really just kind of like help with that support along the entire journey as of the product. So yeah, so I'm not able to say specifically what that could look like, but even for us to we've taken our compliance a whole lot seriously internally, and that's largely because of regulation and also because of the fact that we also want to ensure that we don't leave gaps that could be exploited by even your bad actors amongst your consumers or your customers, right? So it's important that we have that support end to end, even on the legal side.
Yeah, thank you so much for that. That's great insight that could only come from a CEO, I'm sure.
Yeah.
The next question for me, and of course, we're talking lending, so we must also think default. And I think you already touched a bit on that. And in one of your interviews, you had said, and I quote, that CredPal is building the American Express of Africa. And our goal is to make credit cards mainstream across Africa and is obtainable in the United States and other advanced economies. So for me, we all know that Nigerians, and in fact, when I shared the link to this webinar, one of my contacts replied and said that why is it that a lot of the fintech just want to give you money, just want to like lend money to you, and so the culture in this part of the world is that financial indebtedness is a generally bad thing, that people shouldn't take loans and whatnot. So how has that attitude to borrowing affect or impacted your business, if any? And how are you trying to work your way around it and educate people and just to embrace that credit card solution that you're preferring?
Yeah, so yeah, that's a very, very good question. So on our side, right, and I started off, I mentioned this earlier in the conversation where our initial product was allowing to pay in installments, right? So for us, we understand one thing. What makes the developed countries really developed is the ease of living in those countries. It means that as a graduate, I don't have to wait to earn 20 salaries before I can afford to buy a laptop or buy a phone, right? Because I'll be working for, say, the next 40, 50 years of my life. right? Or maybe say 30 years if it's being conservative. So it means that I'll be earning for that long period of time. I don't have to always keep waiting at every single point in time to do things I could have done. Now, on the flip side of it is this, right? For most things that you need to even do to achieve your goals, you need them before you can achieve the goal. So, for instance, if I'd gotten a laptop, say when I was in secondary school, right, and I started programming from when I was in secondary school, maybe I'll have started programming a whole lot earlier and I'll have founded CredPal maybe in 2015 or 2014 and not 2018, right? So there's time value of money attached to even living one's life in itself. So what credit does is that credit allows you kind of like do those things earlier, right? Which in most cases, like I mentioned, you buy items like a phone, like a laptop, even furnish your apartment, live a better life, so to speak, so that you are more equipped to earn more and to even do more. So for individuals, they can do a whole lot more with their lives because they have the tools they need. On the other side, too, for businesses too, they can also run their business and operate their businesses better because they can get access to working capital and funding to do that. So I think on both sides, right, credit, if used rightly, is very good because it helps you acquire things that normally you'll have had to wait for. And in some cases, you might even never even be able to afford it because the flip side is like it's like a catch 22, right, where you need something to get something else, right? And without the first one, you can't get the second one, right? But with credit, you can almost eat your cake and have it, on that side. Now, on the part of the general sentiment of Nigerians towards credit, well, one thing we've done, right, is that we've been able to make credit a whole lot more useful to consumers. So our focus with our credit cards is consumer credit, which means that we want people to spend and buy things with their credit, right? You go to a store, you can buy a phone, you can buy anything, you can even buy food or coffee with your credit card, right? As opposed to just taking a loan and spending money anyhow you want to spend it, right? So for us, the key goal for us is being able to meet people at their point of need when trying to buy something, right? To ease that lifestyle. And that in itself is a different narrative to taking a loan. So if, for instance, and that was a lot of us, if I say, oh, I want to buy an item and pay it in 2 installments, a lot of people will relate to it, right? In fact, a lot of vendors will get a lot of requests that, can I take this this thing and pay you back end of the month, right? But that same person doesn't want to take a loan. But in reality, he has taken a loan. When you take something on credit and you are willing to pay back for that thing, let's say I've positioned ourselves, in that consumer credit space where in reality, you're not taking a loan from CredPal. Rather, you are taking a facility that allows you to do something, maybe buy a phone, buy food, or buy anything, particularly, and then pay us at a later date, right? So I think on our side, by educating our customers on the effectiveness of credit, we're also building channels that encourage them to use credit appropriately, right? Through merchants particularly. And for us, the best part is that we see people's lives being improved over time. Like we get a lot of testimonials from our customers, who got their first phones through CredPal, or who got their first, TVs or laptops through CredPal, right? It's always a big boost for us, when we're telling our stories on that side. And the last side is the fact that for those that still don't want to take debt, right? For us, everywhere in the West, even your government owes a lot of money, right? In reality, it's not a bad thing because without credit, a lot of governments won't be able to build infrastructure. Without credit, you won't be able to build a lot of things. So I think the best approach is to look for the safest and possible ways of using credit, right? Buy things that you're sure, are beneficial. For instance, don't gamble with money from credit. That's a very, very bad thing, right? But if you're buying a gadget, if you're buying an item with credit, that's fantastic. Even if you're taking flight with credit, because you only travel once in a while, right? So I could as well just spoil myself with the travel, with the vacation, and then pay back over the next 3 or 4 months. And then next year again, I go on another vacation, so I pay over the next 3 or 4 months, right? So I think the most important thing here is being able to see credit as a very useful thing for positive things and not using it for frivolous things like maybe gambling or parties or things that you might regret the second day after you do it.
Yeah, thank you so much for that one. And I must give you credit. The app actually looks very beautiful. I've been on the app, and then I know for sure that there is also an incentive that the app gives. So when you repay your loan, you repay your loan in time or as and when due, then you're able to increase your credit limit. And I guess that's also a solution that you built into the app as well.
Yeah,
Great. Yeah.
absolutely. Yeah, you're right.
Okay. Great stuff. So yeah, I just thought I know you had shared once that you face some challenges working remotely, and this may not be the that a certain part of your business, especially the engineers, are able to, work remotely, and another part of it is not. So, how would you say remote working, generally, as one of the residues of the pandemic, has affected, your work and the fintech space, or is it something that is likely to become a permanent feature in your space?
Yeah. So on that, I think the dynamics are different for professions and also regions too. So in Nigeria particularly, we have a poor infrastructure, right? So it means that, for instance, electricity particularly, plus power, is not as good as it should be. So work remotely for a while, 100% in the company, and we saw a slight dip in productivity, and that's largely because the people will not have electricity for hours during the day. Even running a generator during the day is a bit expensive and might not even be the most ideal, impeded productivity while working from home, right? For some other members of the team, especially the engineers, it was a lot easier for them because most engineers have been designed to work remotely, like they build their lives around working remotely, even before they get before getting formal jobs. So it's an easier thing to do for an engineer because they tend to kind of like build their lives around working remotely. They have comfortable working spaces in their houses, maybe have inverters or all of that too. But some other guys who, before the pandemic, didn't really see remote work as a thing, right? It was hard for them to transit into remote work. So yeah, so that's been the biggest challenge for us where, not everyone in the team was able to work productively when working from home. And to be unfair for us to say, okay, half the team should come to work and the other half should stay back. That would be now a bit unfair. So for the sake of that, for the sake of right, we had to encourage everyone to come back to the office, but we still give out some days in the week for them to work remotely. So which means that you can still work, but come around to the office at least a few days a week. So it's more like a blended approach. And I think that for us was a very good approach. And for most companies too, especially in Africa and Nigeria particularly, where our power is terrible, right? I won't say terrible, like it's not so good on that side. Having that blended approach will work a whole lot better. But for some particular departments, say for instance the contact center, who require some hardware, to work, it might be difficult remote, right? Because then you need to set up each skill across the large team. So yeah, so I think it's dependent largely on the roles, and sadly for Nigerians, the environment too is a very huge factor, which has been very, very bad, particularly with electricity, which has made us
Yeah, I think I
Hopefully,
lost you a
again.
bit towards the end. Yes, I lost you a bit towards the end, but I think overall, that's the blended approach is what most organizations are settling for now. Just a bit of like the hybrid. And thank you so much for that question. So just to remind the audience that since we're nearing the end of the session, so please put your questions in the Q&A box so that Mr. Olaogun can respond to them. I'm sure that some of the engineers and tech founders who've joined this session, would like to know what exactly is the hack for, getting seed money, raising Series A funding, and attracting, first class or A class investors like Y Combinator, Tangerine Life, and etc. and etc. So, what would you think, or what would you say positioned you for those kinds of successes? And does corporate governance, for instance, have a role to play? So for instance, I volunteer for a foundation called the Impact Investors Foundation. And impact money targets a certain class of social enterprises, who are not only looking to make profits, but are also solving, certain, social problems, right? And you don't attract those kind of investors, including Y Combinator, unless you are first positioned, for the kind of capital that they're bringing. So how exactly were you intentional about this, making sure that you were investment ready, or you just believe solely in the solution without thinking through or being intentional around the structures you put in place?
Intentional, I would say. So on one side, what investors will favor are solving pretty large problems, right? So if you're trying to solve a very small problem or maybe a non-existent problem, then it might be hard getting funding.
Right.
And the reality is the fact that it's not even because of investor sentiment, but even in terms of your own potential to, as a founder, it's a whole lot smaller, right? So investors tend to go for businesses who are solving a relatively large problem and whose impacts can be felt across a wide segment of the society, right? That's on one side. So we're trying to solve problems is big enough to be solved, right? There's what they call the market size, which you have to really measure. If you're trying to, for instance, now, if I have a dog startup in Nigeria who caters to dogs alone, right? There's a high chance that only a few guys in Nigeria have dogs, maybe like less than 1% of the population have dogs that would want to use my service, for instance. But in the US, it's a huge market for dogs in the US, right? Because they love dogs so much in the US. So understand what you're trying to solve for and see how large it is, right? That's one side. The second side then will be what's your approach towards solving it. And it's very, very important because your approach is what determines things like your defensibility, your unique value proposition, and all of that. Our approach was largely through driving consumer credit, right? As opposed to giving out cash loans, we're driving consumer credit, being able to offer credit at the point of sale to customers. So you could go into some stores today and then you could buy an item and pay back in installments using CredPal, right? So that was our approach. So it's uniquely different from most other credit companies, and right now, even across the entire world, there's a buy now, pay later buzz, which is really top now, right? So for us, second part is, you solving this problem in a unique way, that makes you kind of like stand out and makes you a winner in that space. So, then the last part will now be how you present yourself. It's very important because you need to be able to communicate effectively what you're trying to do, right? Which is why there's that investor readiness part of it where you have to go through, some form of processes in place. Also a bit of corporate governance to what's your ownership structure like, even as you start raising funds, what's your plan for the funding? Do you want to just buy cars and buy fancy clothes for your staff, or really do stuff with the money, right? So there's a whole lot that has to go in place in terms of how you're going to use the funding too on that side. So it's important that you cover it end to end. And I think once you can cover and articulate what you're trying to do effectively to investors, then you likely get it. You have a higher chance of getting funding. But ultimately, it starts with the problem you're trying to solve. If the problem is in itself too small or insignificant, then there's nothing you can do with it, right? And then the second part is your approach to solving that problem is also very important. If you're doing what everyone else is doing in the industry, then you can as well just go start of the same thing they're starting off, right? So the problem itself and your approach is a very fundamental part of raising funds and getting support, and ultimately it helps you win in the market, on the long run.
Right. Indeed, that you have to be intentional about being investment ready. And again, still back to the first statement you made about solving problems. So I guess we all cannot deny that even investors and the consumers themselves, will be drawn towards any business at all trying to solve real problems, right? Again, the follow-on question to that will sort of be what your advice will be, and this, rather than just addressing generally, what your advice would be to a tech founder right now, who has achieved MVP and is trying to um, raise capital. What exactly do you advise that they? Is it something that your in-house team did, trying to communicate, that brand story, or you have to, get an investor? Just some practical advice, that really just helps them and, saves them the stress of reinventing the wheel.
Yeah. My advice would be, just kind of like following what I said earlier. You need to be able to tell your story in the best possible way, right? It might or even from investors too, right? The reason for this is that every investor gets maybe at least 20, 30, right? Or even more in some cases. So filtering out noise from the real stuff, it's very hard for investors to. So you on your own side must be, you must be very deliberate in how you present your solution to investors. So that would be my first advice. And the second one really is, having a very strong understanding of what you're trying to do, right? For most conversations I've had with investors, because I'll say I've had over 200 meetings with investors, right? So you can imagine how many investors I've talked to. When I was in YC, there was a time that back to back every single day of the week, I was having like 2, 3, 4 meetings, and all of that on that side. So, but with time, I was able to own my pitch and my story, so that it was very easy for me to tell them exactly, how I was going to solve the problem in a way that they will understand and they will easily be able to support me on, right? So a bit also comes with experience, but which is where talking to founders who are experienced comes in very handy, because every startup is niche based, right? So for instance, if you're trying to build a startup for credit, it's a whole lot different from building a startup for, say, agriculture or something else, right? For most cases, you might need to talk to founders in your space, who can give you better guidance on how to go about the fund raising process, and ultimately, even on your journey to as a business person, right? Having the right mentors, having the right conversations would also help in on that journey. But my advice would be for you to prepare yourself. And one thing is this: you need to over prepare. I keep saying this, for every one person that gets funded, there are like 100 people who wanted that but couldn't get it. So it means that a lot of other guys are qualified as much as you're qualified. So by all means, be over prepared. Like I'll never forget when we got a visa award in 2018, right? And we're up all night. I and my co-founder were up all night, rehearsing for our pitch. We were really, really, in fact, we had meetings with guys in, I think, in Singapore and other countries. We had to have a meeting at around 2 a.m. at night, right? So there's a whole lot of work that goes into preparing for this type of thing. And you have to be prepared, because if I was up by 2 a.m. working and then another guy is there sleeping in his house and eating food and expect to get the same results, I think the answer will be quite obvious, right? So being prepared, working your boots off, being able to look for every single possible thing you need to get yourself, in a good position, right? Particularly for your business, and then later for funding is important. And I think with all of this, it's easier for you to raise funding and grow the business.
Indeed. Thank you so much for that. It could only come from a place of experience. I mean, I can imagine speaking to over 200 investors, just to bring them down to 4. So, and indeed, I guess it applies across board. They're totally unrelated, but I'm sure there are some students on this platform who are also maybe applying to law firms, and people apply to 5 and they don't get any response, and they're like, oh my God, they're not getting. I mean, while I was while I was hustling to get internships, for my strategy was for every 10 application, I'll get one response. So if I needed 5, I just send the 100. So yeah, indeed. So there are so many, quite a number of questions, and they are very pungent. And I just think these questions totally beat all the questions that I have left. So I'll just go right to the Q&A. So
Okay.
if I can go on.
Absolutely.
Okay, thank you. So the first question here is from an anonymous attendee on Twitter. It's from Anon. What's CredPal doing regarding data privacy and compliance with the NDPR? How does this position you for growth acts? I think that's a very solid question. Do you want me to read all the questions, or you take them one after the
I can say one after the other.
other? Okay, so that's.
Yeah, so on this, well, I mentioned earlier too in the conversation that we're taking our compliance a whole lot more seriously now, because beyond the NDPR, right, and beyond you trying to be compliant with the regulation, also you also have a lot, you also owe your customers a whole lot and your stakeholders a whole lot, right? So it means that you have to protect their data, and ensure that, things don't go wrong that would affect them negatively. So yeah, so we're taking that a whole lot seriously. And I think I would advise every fintech company to do that, because it's even a huge avenue for fraud too, if it's not taken seriously. So I'll give an instance. Some customers will impersonate other customers, right? And if you have very weak data protection policies, they could easily get access to customer data on your platform and then come in as that customer for fraud. You understand that? So it means that even you adhering to these compliance policies are helpful for your business to prevent losses on one side, and on the other side to be compliant for the regulators too. Yeah, but we're taking the whole lot seriously, and we advise every fintech player to also do that too on that side. And for the growth side, like I mentioned, for us, right, if you're thinking of growing rapidly and aggressively, you need to take this seriously too. And that's largely because of the fact that the more customers you get, the more you start seeing unique cases that would give you concern. So if you're not prepared for those cases, then it could affect your growth, right? You could see some fraud cases, you could see some customer complaints, that are very, very bad, right? And a lot of that will come up. So as you grow as a business, ensure that you cover those bases so that when those things are happening, you are well prepared to deal with them, or else it could stall your growth, along the line.
Yeah. Right, fantastic. Yes, so the next question, just go right into it. So this person says, good day, sir. Do you think changing career from a construction field perspective to fintech career path is a good idea due to the rate at which fintech engineering roles are on the increase and are lucrative?
Yeah, I would say it's a great idea, right? It's a great idea. You can change into a tech role from any other career path. The key thing here, I would say, is that you must be passionate and you must be willing to go the whole mile. It might take you like 6 months to 1 year to really get yourself ingrained, in being able to work in a tech role, which means that you might need to take a pay cut. For instance, you might need to do an internship at a tech firm that will pay you far less than you're earning a construction fee. So be ready to pay the price. But trust me, if you're diligent and you're hardworking and you're also smart too, in about a year, you start seeing the results and benefits of changing the career. So yeah, I would advise to do that, but weigh all the consequences and the pros and cons for doing that too.
Yeah,
go ahead.
Excellent stuff. So the next question is from Anon as well. This person is asking that, just a moment. Okay, that we're a small fintech company out of Abuja. My question revolves around raising seed fund. How do we contact and attract investors? So I mean, do you still want to speak to this? I believe this has been answered. Or do you just want to speak?
I'll speak to it.
All
so
right.
I'll tell you one act we did, right? And this came from a very friendly advice, and I think it might be very helpful. So we tried reaching out to investors early on, very early in the journey. We got a lot of no's. Someone advised us to reach out to incubators and accelerators. So we went on, I think it was F6S or so. That's not the site, right? And we started looking for incubators. Now, so and we got a lot of them, right? A whole lot of them. So what happened was that our first check came from an accelerator, 20K, fine in US, as it came from the US particularly. While everyone was saying not to us in Nigeria, there were some guys in the US who were willing to take a bet on CredPal. So like I said, it's important that don't just put all your eggs in the basket of, oh, let me look for investors. Go online, look for incubators, look for accelerators, right? Who willing to take you. I mentioned F6S is a platform that you can check. And the other platform like that where you can get access to these guys. And it can be someone in Hong Kong or Singapore or even in China, that will offer you your first check or your first access to resources. And once you get that validation, then it's not easier for you to get investors to come on board after. So yeah, so don't just limit yourself to investors. Go after incubators and accelerators across the entire world.
Right. If you could just repeat the platform again, the one of the examples you gave.
F6S. I need to confirm that's real.
Okay. We can always send it to the attendees after the session. That's fine. So the next question is from another attendee who's asking, most of us young startups have issues with sustaining workers working for us financially through, that is, salary remunerations, etc. Even when the business is not making much. What can we do to checkmate this? Right. What can you do?
So I think the first thing, you have to be very realistic with what you need, right? Like I mentioned, your MVP must not be a full-fledged mobile app with all the bells and whistles. So first of all, get your barest minimum MVP. Now, to get resources to do that and to build that, you could then consider stake options. That should be the last thing you should consider, though. If you can save some money or if you can get some money to at least pay, that would be more ideal. But then for your founders, you need to also consider giving them some stake, in the business. So the first part is ensure you, as in like kind of like get your minimum viable product and what's going to take to build it. That's the first part. And the second part is, looking for the best pay for it. While an option will be offering equity to the person you want to pay, for that. That would be the last resort, paying them with a bit of sweat equity too on that side.
Right. I mean, just a follow on to that. I was having a conversation with a tech founder friend, and seems to say that or in your opinion, what do you think the best approach is? That he wouldn't typically, offer equity upfront to any investor, and that most of the tech startups are exploring convertible notes and some other options. I mean, what have you seen that is more prevalent in your space, and why would you not offer equity to an investor upfront, even when they're also sharing the risk, right?
Yeah. So the good thing is that your convertible notes, in most cases, will convert to equity on the long run.
Right.
So it means that you are kind of like covered as an investor if you're very clear terms. It's only if there's an option for the company to pay you back with cash. But most notes these days won't allow that to happen. So you have to it has converted into equity, right? So I think on that side, it's covered. It's still equity, but then at later dates.
Right.
So it gives both the founder and the investor some wiggle room based on how they see it. So yeah, so I will advise people to use convertible notes. The safe notes is one of the most popular right now, which Wise introduced. Yeah, I advise that, and then it's also, it's a whole lot more flexible for both parties, I would say, because it's less, even for a safe note and a convertible note is less stringent in most cases than for an equity or price round on that side.
Right. Great. Thank you for that. So there's one more question here. Says, I just got to know about CredPal. However, while this webinar was on, I tried to register on the app. The application was declined. I understand that most of the credit apps do not advance loans to lawyers. Is that the case, sir? Could there be a reason for this?
I can't say exactly what the reason was, but one of the most popular reasons for us declining customers are if they have bad loans. So the good thing is that the entire lending space is an ecosystem. So if you are behaving badly with, say, Branch or another lending company, right, there's a high chance that if you go to your credit report, CredPal might decline you, and we could do that very, very fast because that's easy for us to access, as a company. So yeah, so to the question, if you don't have a bad loan, then you could appeal. We have an email for appeal.
Right.
But if you have a bad loan, we advise you to go clear the bad loan first before you come use CredPal. That's been the most popular reason why we decline customers. But we don't stigmatize or different. I don't know what to do. Like, so we love lawyers and we love every other profession, in the industry. Although lawyers, generally are proven to be a bit problematic, but we don't mind lawyers. We'll take lawyers on. We have Aluko.
I mean, I don't know what lawyers did to. Even I hear landlords in Lagos don't even want to employ lawyers. So people have to say they are business strategists to get accommodation in Lagos because.
That's already. So I wouldn't want to answer that, but I guess you know the answer already. But with CredPal, we allow lawyers to come in, right? We're not. We don't.
Well, I was able to register successfully, so I guess I can testify to that.
Testify to that, yeah, absolutely.
Right. So does CredPal, this is a question from Precious James, is asking if CredPal has initiatives relating to development of young talents interested in fintech, such as internships, training, etc.
Yeah, absolutely. We're currently setting up something around that. So, so if anyone is interested in an internship position, and also training and all of that, I could drop the email of careers email. Let me see if I can share that in the chat.
Right.
So you could go send out an email to the HR department. But yeah, absolutely, we're open to taking on interns and train young talents.
Excellent. So I think this is the last question. If there are any more questions, like you said, we would try as much as possible to respond to them and maybe publish after, but I'll take the last one. And somebody, I think, sent a question in chat saying that they just successfully registered on the app. So I guess that person, if they don't have a bad loan, like you said, can easily appeal. Great session so far.
Yeah.
I'm building a startup that focuses on lending money to people for a specific purpose. However, the consumer lending in Nigeria doesn't exactly enable less than 15% annual interest. And we don't want to keep people trapped in loans or pay back between 20 to 50% interest. Any finance act or partnership tips that you can offer to this person?
This is in Nigeria particularly, and part of it is largely due to the weak nature of the naira. So if you're getting debt funding from outside the country, it's quite expensive, right? And even for local providers of capital too, it's also equally expensive on that side. So yeah, so it's something that we are facing right now in the entire industry. But one thing is that, the reason why typically interests are high is largely because of the fact that the average performance of loans in Africa and Nigeria particularly is not as good as those in the Western countries. So in US, for instance, we have an NPL of like 1% for the entire country, while in Nigeria, it could be like, in reality, it could be like maybe 25 or even, like maybe 20% thereabouts, right? So it's hard for you to compete at that level, with what they're offering in developed countries. So yeah, so it's a process. We believe that with time, with better education to consumers, and better lending practices, we'll be able to reduce the rates across board. But for now, depending on your product, you might need to charge high interest rates. The other part is this: if you're lending to people that you know very well. So for instance, if I'm lending to, say, companies that I'm sure of their income and other things, then you could then lower your rates. So just lower your rates to meet your risk appetite, right? So you can get, even in Nigeria, you still have loans that go as low as 1.something%, 2%, right, for some types of customers. And while some other customers will get like maybe 20% thereabouts, for that type. So it's all about the risk appetite of the lender and also the profile of the consumer himself. Yeah. So So yeah, just kind of like analyze all of that and then give the best rate. But don't feel bad to give high interest rates if your business cannot support it, because really we're all in this together, so to speak. So no one is excluded from the pains of what we face as lenders in the country.
Yeah, great, amazing. I think we've answered all of the questions, but just a final question, from our original stash. So, what exactly, in your opinion, do you think, where will the development come from? The other day, Tech Cabal released an article where they said fintech are expanding through diversification. Is this the strategy for growth? Is that the same strategy for growth for CredPal? And what exactly is the outlook for fintech generally in Nigeria? Just to cap it off.
Well, I think the outlook is very positive for fintechs in Nigeria. There's a whole lot of there's a whole lot of there's a whole lot of effort towards that. Even the central bank and the government are also pushing very hard for financial inclusion, and all of that, right? So I think the outlook is very, very positive on that side. Yeah. So and then the other side too will be there are lots of opportunities too. There are lots of people who currently cannot access financial services, and a whole lot more who can access credit, for instance, right? So I think in terms of that opportunity for growth, the best part for us is mobile phones. That really changed the game in Africa, particularly. It allowed us to leapfrog the West. So you could serve both mobile money type solutions, payment solutions, credit, all through a customer's mobile phone. Which thanks to China, we have a lot of cheap phones out there that can access these services. So I think the outlook is positive, and it's going to keep getting better and better as time progresses. So yeah, so for everyone in the space, in the field, just keep at it and be positive. Things are going to get a whole lot better. And let's just hope that we don't have surprises like the pandemic, which was surprising for everyone. Like that was an anomaly. And the second one will be the government to not being too erratic in making decisions that might affect us negatively. Once those two are covered, I think the outlook is generally going to be positive, for the fintech space.
Yeah, thank you so much. Indeed, the outlook is looking fantastic, and like they say, data is a new gold and a new oil, and so is fintech. Again, a lot of growth around payment, a lot of growth around agency banking, and even the banks are starting to restructure so that they can compete with the fintechs, right? So that we're seeing a lot of activities as well as practitioners. I think this has been a fantastic session so far. But before we go, there's going to be another poll coming up. Please respond to this poll and then the next one so that we can wrap up. So the final thing that we wanted to say is that somebody had asked earlier whether they will be getting the recording for this session. Yes, we'll be sending it out. Marketing will be sending it out, and they will be publishing it on the website as well. And Mr. Olaogun, I think my last question, this is definitely, I know I said final, but this is the final one, is how exactly would you want to be remembered in this space? And or to put it differently, what is that one principle that you'd like to live by, and what is that legacy that you would want to leave, that impact that you'd want to make in the fintech space and beyond?
Well, I think for me and my co-founder, I think we will talk to this, is the fact that we want to really redefine the consumer credit space in Africa, and particularly from Nigeria, right? And the reason for that is that we've seen how consumer credit has really helped the developed countries, right? How it has helped them, even the entire economy in itself, it's really helped that on that side. So, and we want that impact in the. So we want the time to come where you're getting a mortgage, you're getting the car financing, like a young graduate just got a new job and you need to get some things, they cannot come to you very fast, and that way you're better positioned to succeed and excel, right? So that real impact is what I personally want to see happen over my lifetime, as a result of what we're doing with CredPal. And ultimately, regarding my guiding principle, it's don't waste your pain. We've all gone through various cycles, even in business and personally. Don't waste that pain. Always learn from it. Always build from it. Even founding CredPal came from a pain that we saw personally and for the entire country, right? So you're not wasting your pain. You're not just complain all the time. Don't just complain, right? Do something in simple terms, right? Don't waste your pain. That'll be my my final words in terms of and advice to everyone. And that's also my guiding principle. But I see us building a future that makes everyone get what they want when they need it, without having to go through a lot of pain to get that.
Yeah, thank you so much. I have personally gained a lot, and I'm sure everyone who's been part of this, since we started by 12 noon, has also gained a lot as well. I wish this can go on. It's definitely fun chatting with you and learning from your wealth of experience in the space. So here is to just saying thank you to you for honoring our invitation, to your team, to Awa for being very responsive and working behind the scenes, and of course, Aluko and Oyebode, those the organizing committee, Inarume, who is the senior associate in the firm and also heads the fintech practice, and Adeola, who heads the IT support, and Adedeji Odundun, your friend, and who also heads our marketing team, and all other members of the organizing committee. I want to say a very huge thank you, Oluwatamilore, Greg, and Mimi, and everybody who was part of this and who shared their brilliant ideas. So this is how we draw the curtains, and I guess we will see you on the other side.
Yeah,
Thank you so much. Right. Yeah.
Thank you for your time too. And I also want to thank, I see a lot of CredPal staff, on the chat too. So yeah, thanks guys for showing up. Yeah, and thank you to Aluko and everybody for this opportunity, to speak.
Yeah, excellent. Yeah, I think it was a great outing. Thank you. Yeah, bye-bye, everybody.
Very great. Bye.